Welcome to another Coffee with Samso, where we talk with ASX companies and CEOs and MDs talking about the strategies and their stories. Today we've got Blackstone Minerals here with Scott Williamson. We're at the University Club in Crawley, and that we've had many chats with Scott over the years, talking about where Blackstone is going, and it's really interesting that Blackstone's now venturing down new paths, although we're still in the same sector. Look, Scott, thanks for having time and coming and having a chat again. But yeah, let us know what's happening.
Yeah, thanks, Noel. Always great to catch up. So we recently announced our strategy to expand the refinery in northern Vietnam, so our Ta Qua nickel sulfide project refinery. And what that means is that we're driving a bigger scale, much larger scale. So we're looking at 4 times the size of the previous study. So the previous study looked at one train, which is around 200,000 tonnes per annum of nickel concentrate from our mine. We've now got this deal with Trafigura whereby we can purchase third-party concentrate from Trafigura. We can bring in nickel concentrate from all around the world, and we can put in 4 trains, which puts us in that sort of scale that puts us around the top 5 of nickel, class 1 nickel producers in the world. So 4 trains is 80,000 tonnes per annum of nickel, and that's the same scale as some of the major players like Glencore and BHP. So it's a significant update, and it will take a little bit of time for the market to digest this. But this is a demand-driven strategy, and this is because of our conversations with the lithium-ion battery industry, and we're confident that the partners will fund this, and yeah, so we're really excited about what this means for Blackstone.
When we started talking about Blackstone going down the road, you were explorer, had Ta Qua, and then you moved on, and then it was the next challenge whether you had a resource or not, and now to becoming a producer. Now, like, you're down this downstream story where you, as you just discussed, you're sort of almost fast forwarding your production levels. In terms of the company, are you moving into a sector that's becoming more competitive for funding and things like that? Is that something that's on your minds, or as you mentioned, is this already sort of the funding sort of have asked you to go down this road?
Yeah, it's a good question. So this is really driven by the conversations with the battery end users. So they've said, we'll take as much nickel as you can produce, and we've said, well, how do we do that? And that's why we've partnered with Trafigura, and over time we'll partner with other upstream feedstock providers. So it's not a funding issue, and we're not doing it to try and access the funding. The funding is just there, and it's driven by this movement towards electric vehicles. So the partners have said, we will take as much nickel as you can produce, and now it's a supply issue. So we've gone out and done this deal with Trafigura whereby we're coming with some supply to a table which is, puts us on the map globally, and that really makes those conversations much clearer and to the point, and so we can move to the next stage very quickly with these partners in hand.
A lot of the people that follow me, and obviously I'm an investor and people talk about it, and I always tell people Blackstone is like a blue chip in that middle sector, small to medium sector, for these reasons, blah blah blah. And before it was about the resource, and you made a really good comment when we had a coffee Samso before. Good geology will just bring you more and more, and just produces more upside than downside. And I felt I sort of looked at it, and I thought, yeah, this is right. I mean, your resources there, and you got all these targets, and you're just gonna get more and more and more. And the question was, what happens at the end, right? So now that you guys have announced this downstream, in our last coffee Samso, you mentioned that your partners are saying, hey, we want to do this. You need to do this more. You need to fast forward the production side and things like that. Is this something that you guys feel that will add significant value, or where does that value thinking for you guys on the management side, obviously?
Yeah, so if we look back at Ta Qua, we're still confident it's a a world-class magmatic nickel sulfide district, and the drilling is showing that. So we've made the King Snake discovery, we've made Taipan discoveries in recent times. We will continue to make major discoveries through that nickel sulfide belt. Our mine will always feed 1 or 2 trains. So if we think of the trains again, so our mine, our scoping study was based on 1 train, which was the large disseminated ore body at Banfook. Our massive sulfides could probably feed up to 1 train as well. So there's no reason why we couldn't feed half of those 4 trains. So the upstream mine will still be a significant value driver, but it won't be the same value as this refinery, because the refinery is scalable. So we don't have to stop at 4 trains. We can go to many more multiples of that, and we can take this, and it's because it's modular, we can take it to other jurisdictions. As long as we can have renewable power, then we can take this same refinery process and put it in other jurisdictions like the US or Europe. So at the moment, we're very happy in Vietnam. It's lowest labour costs we've seen, the hydro grid power, which drives this green nickel product. But there's no reason why over time we couldn't take this to other jurisdictions once we've I suppose delivered product from the Vietnam asset. So it's a very scalable business, and that's why I think it's important for people to understand that the downstream business is more of an industrial or a chemical company, and it's not reliant on the upstream business. So the upstream business is a separate business unit, and that relies on mine life and permitting of mines, tailings facilities. The refinery is decoupled from that, and it relies on offtake. So it relies on good partnerships with the likes of Trafigura and other mining companies. So it becomes more of almost like a factory as well. So it's product in, product out, and it's completely different to what a lot of mining investors are used to, which is what's the mine life, what's the NPV. It's not about mine life or NPV. This is about multiples of EBITDA and when is the next contract, and where's the next offtake, and what does our order book look like, and that's where we're heading.
So, from an investor point of view, and a lot of retailers, what's the product at the end? Are you just nickel concentrates, or what's the downstream product in? What are you selling?
So we're going to purchase nickel concentrate from our mine and Trafigura, and that you pay 70 to 80% payability for nickel concentrate at the moment. That payability is going up. We convert it into the first stage of the cathode, which is the NCM 811, which is the nickel cobalt manganese precursor product, which is the first stage of the cathode. That trades at up towards 35 to even 50% premium to the nickel metal price. So it's a significant uplift in value of that product. To do that, we do need to purchase cobalt and manganese sulfates, or we can purchase cobalt in different forms. With our deal with Trafigura, we can actually purchase cobalt through other forms, which could improve our margins. So it's a 70 to 80% payability, converting to 135 to 150%. So it's a significant value uplift. To do that, we obviously there's some inputs, which is the reagents and the cobalt and the manganese to do that. But it's a path that not many people are taking at the moment. Most of our peers take MHP, which is the intermediate product, and then they convert that into the precursor product. We're one of the only groups that's going all the way from nickel concentrate through to NCM 811. A lot of our peers are stopping at nickel sulfate. Our belief is you need to go all the way through, and you don't want to be crystallising the nickel at a low value, low nickel content nickel sulfate, which is a 22% nickel product. Our product is a 51% nickel product, which means it's a much lower carbon footprint when that product gets on a ship.
When I did my coffee Samso with Rick Rule, going back a couple of weeks ago, we sort of talked about the EV world, and he doesn't think, like rare earths is not actually very rare. He talked about how lithium is actually not very rare, etc. But we all agreed that in that the processing part of the EV revolution is the one that goes forward. So from my lack of understanding of Blackstone, and I'm sort of hearing what you're saying, is that we're always saying, it's a great story, fantastic story. What's the deal breaker? What's going to make you guys go, we should reassess?
Yeah. That's a really good question. So if we go back to the rare earths aren't rare situation, so nickel's not rare either in the laterite form. So there's a lot of nickel laterite. Nickel sulfide is rare, and that's probably our biggest issue, is how we're going to feed this refinery with nickel sulfide. And so to feed this refinery, we're relying on good deals with juniors. We're relying on exploration success across the globe as well. To feed this refinery for the next 20, 30 years, this industry needs major nickel sulfide discoveries, and so does our refinery. So we can lock in offtakes for 3, 5, maybe 10 years. But the nickel sulfide feedstock in 20 years' time, we don't know where that's coming from as an industry. So it's important that we invest into the juniors as well. So we'll do a partnership model whereby we will come along the journey as well, and maybe even own some mines over time as well. But our biggest risk is there isn't a significant amount of nickel sulfide, and to mitigate that risk, we can also take MHP, which is the nickel laterite product. So our flow sheet is flexible in that we can also go from MHP to the NCM 811. So we've got that flexibility in our refinery to actually take the nickel laterite product. Our preference is to be looking for nickel sulfide con. But so yeah, that's probably, as an industry, that's the problem, is laterites are very high capital, high OPEX, and not as green as our hydrometallurgical process on nickel sulfide, much lower capital intensity. This is the lowest capital intensity per nickel unit you'll find anywhere in the industry, and we'll show that in our PFS in the coming months. So yeah, it is about supply. Supply is the problem, and we need to address it as an industry.
There's a few companies out there, obviously, that's sort of running this processing part of things, where they've come from as an old miner. Like, I think Ecograph comes to mind, and I think FYI has a similar situation and things like that. And I can see a lot of other ones coming through. What stage they're at, I'm not that sure. Is Blackstone fit that model? Because obviously that seems to be the sector that seems to be taking more legs or gaining more legs in the market.
Yeah, and ours is probably a little bit different to some of our peers that have gone downstream. Some of our peers that have gone downstream have seen that as an opportunity to add value, which we have as well. But ours is more driven by that collaboration with the partners, and the fact that the partners don't have a solution yet for all the demand that's coming. Their solution is, we'll get nickel laterite, HPAL, MHP from Indonesia. That's, we believe, is a solution that is highly risky, and so we're offering an alternative to that. So LG came out and said they want to put $10 billion into Indonesian nickel, which is HPAL, nickel laterite. We're a solution to that and an alternative to that, and we believe Vietnam is a much better jurisdiction to be doing that, and nickel sulfide is a much better way of doing that. And through our process, we believe is much cleaner and greener, but more importantly, we can collaborate with those partners and show them a better way. So it's driven by that collaboration. I've done 8 trips to Seoul, many Zoom calls now, and it's driven by that sort of close collaboration and partnership with the large players in South Korea.
I mean, I've always said that companies like Blackstone, and obviously you guys are in right in the middle where the market is. You're in Vietnam and Southeast Asia, and China's down the road and things like that. And as you move into this area, and we're talking from explorer, miner, producer, now down to this processing, I call it the processing sector, whatever that may be. How more important is that in your minds, or it's doesn't matter if your stuff is from Africa or Aussie and things like that?
Yeah, so every concentrate that we purchase, we'll be making sure that it's done ethically and environmentally friendly way, and because it's sulfide, it's already best in class. So the fact that we're using sulfide nickel puts us in the lowest carbon footprint of all nickel mined. So we're confident that ours will be very clean and green, and we'll make sure that it's ethical practices. So as long as that we're ticking those boxes and we're making sure that it's done properly, we'll take concentrate from anywhere. So we're okay to access concentrate out of Africa, even the DRC, as long as it's done ethically and environmentally friendly. The DRC has some of the best hydropower in the world, so a lot of people don't realise that the DRC cobalt is actually very green cobalt and much greener than, say, the cobalt out of the Indonesia. So it's a focus on our supply chains. It's making sure we have strong relationships with those partners in the feedstock supply and building that relationship over many years. So we believe the Trafigura relationship will be a multi-decade relationship. They're the largest nickel trader in the world, or one of, and we're confident that they have a similar vision. So they also have a similar vision, which is clean, green nickel, and that's why we've aligned with them. So and so much so that they're really opening up their opportunities within their business to even do more green, and so they have a $2 billion green power fund that can potentially help us through this journey as well. We have an abundant power source already, but there's no reason why over time Trafigura and Blackstone go together and look at other opportunities for upstream mining. And so how do we feed into this refinery for the next 10 or 20 years? And so it's making sure that we have those strong relationships, and we're I suppose we're all aligned, which is to produce a green product.
I mean, I think the resource run has a lot more legs, and again, lots of people have sort of said, yep, it may give you a bit of a heartache in the next short term, 6 months, 9 months, but 2-3 years, everyone should be smiling in the sector, right? You're in the forefront of all this money, green fund, and all this kind of stuff. What are they saying that the likes of all the people who watch this who never get an opportunity to sit in front of them? What are they telling you about how long this, or potentially where do they see the sector running? Is it going to be like what I've just described, or am I off key?
Yeah, so because we're still in that development phase, we obviously keep an eye on the nickel price, but we're more focused on where's nickel and where's that NCM 811 price. So even though the nickel price has dropped away, NCM 811 is still very strong, and there's a big demand for that product already. But what we're focused on is 2023 through to 2025. That's when the supply crunch comes, and that's where we're confident that's when the market will see the issues. The issues are supply, security of supply, and that's those conversations we're having with the South Koreans. I like Robert Friedland's term, the revenge of the miners, because it's going to be so real and so difficult for these groups to understand the process of drilling and or block modelling into mine planning, into developing a mine. These processes take 5 to 10 years, and we don't even know where we're getting our nickel in 2023. So there's a real issue here. We need that downstream capital to flow all the way through to the mine level, and I think that's coming, and that's probably when the market realises how desperate and how urgent these groups are to access these metals.
Yeah, I think this push to EV and everyone's wanting to be happening so quickly. I think as you just described, they just doesn't realise that it takes a bit of while for you to go from trying to find it to putting it on the table, or in a car or electric vehicle. Look, Scott, I mean the Blackstone story has always been good, and we talked about what could go wrong. Going forward, obviously from an investor, your share price holding really well. I missed out on buying it at 41, but maybe you should do something bad and bring it back a bit. But anyway, I mean, it looks steady. It looks like it's set some sort of support level. Going forward, from an investor point of view, what kind of, obviously we talked about the value add, but from an investor, they just look at share price, right? What can they look forward to? Yeah,
so what we've seen is that there's a movement away from drill hole to drill hole, which is great. So finally, I've I've decoupled away from the retail market expecting the next massive sulfide hit, because they're going to be there. They'll be there for the next 10, 20 years. So that's fine. The mine is worth circa $1 billion. We're trading at 150 million. So we're trading at a 0.15 times NAV or MPV for that one train. As we add trains, we're adding significant value uplift on that $1 billion project, which is the mine. And so as we show the market that those 4 trains will be funded, and they'll be funded without dilution or major dilution. So we will fund this at the asset level. So there won't be major dilution to the Blackstone shareholders. So we're looking at multiples of EBITDA, which is significant numbers, without dilution to the shareholders. That's unheard of in this industry. In this industry, it's all about, okay, the funding is debt and equity, conventional debt and equity, where you dilute your shareholders. Our funding is bring in a major player, dilute an asset that doesn't exist yet, and still have significant uplift on the value that asset creates. So that's a real different model to what the ASX investor is used to. Once the market realises that we're not funding this, the major players that say $10 billion into Indonesia will look at this and say, well, this is a no-brainer. And so once the market realises that, there will be a significant re-rate, and I don't know when that will happen, but it's probably the day we announce an MOU or an LOI or some sort of agreement with a player similar to EcoPro. I think EcoPro helped put us on the map, but a lot of people still don't realise that EcoPro is the largest cathode manufacturer in South Korea, one of the major players in the industry. If that had been an LG or Samsung, we might be in a different situation. So what we're going to have to do is put in a bigger name, and then it will sink in. It has to. So that's what you want to look out for. And obviously, plenty of excitement on the mine level, but the mine's not going to drive the significant value. Because of this scalable nature and the fact that it's modular, with our partners, we can take this from Vietnam and we can do it again in Europe, in the US, right next to these other battery plants. This is a global, scalable product that puts us on the map. So we're in the top 5 with this first 4 trains, and that's only the start. So yeah, some big aspirations, but it has to be done. As an industry, we don't have a solution, and we're providing that solution for these partners.
So when's the big name coming?
So those conversations are ongoing. So put it this way, we've been talking to these companies for over 2 years. And until now, we only had a small mine, and it didn't move the dial. Now we're talking to them with a globally significant opportunity. You can imagine what those conversations are going to be like going forward now that we've got the scale of a BHP or a Glencore.
Yeah.
So when does that happen? We'll see.
Well, I hope you guys make heaps of comments and put lots of likes on me asking that question. But look, Scott, fantastic. I mean, look, Blackstone, to me, every time I look at you announcing, it goes, oh, we've had massive intercepts and this, and I'm looking, oh yeah, it's a bit boring because you know what's going to happen. You know you're going to keep hitting these things. But I think that the going downstream is a different picture. I think it's in unison with what the market's doing. I think it, and you know, you could actually be a different company when all this sort of take hold of. It's good to see, and I hope that you guys keep doing well, because then everyone will know, yeah, no, I was correct. You know?
Yes.
Well, it was 15 cents, right?
Yeah.
You keep reminding me. But look, Scott, thank you for your time. I think it's fantastic. I hope we can keep, you know, following the story. And it's great, you know. So Blackstone is one of the few companies that I've been sort of associated with since, you know, a while ago, and it's great to see how it's blossomed and done well, and we're all waiting for the big name. Maybe before the video finish, you might give us a timing. But look, guys, feel free. Definitely, I'll encourage you guys to send questions, make comments, and I'll make sure Scott responds to them, and I'm sure Scott will do it anyway. But anyway, look, thank you, and let's see what happens next.
Thanks, Noel. Pleasure as always.
All right.